Hi, guys. Welcome to The Social Block, the podcast that explores the intersection between blockchain technology and society. Today, we have a cool episode that's going to be all about the Stacks ecosystem. For those who don't know, that's a really trendy new Bitcoin layer 2. We're going to talk about Bitcoin DeFi. And lastly, we're going to talk about Bitcoin-based stablecoins. Our guest for today is Jakob Schillinger. He's the founder and CEO of Hermetica Labs. Jakob also used to work for Kraken, and he was also a part of the latest Forbes for 30 Under 30. So without further ado, let's get into that episode. Hi, how are you doing?
Good.
Good, that's awesome.
Really good. How are you?
I'm great as well. It's just the end of some holidays where I'm from. So I've had a refreshing few days. I'm going to preface this by saying I'm really excited about this episode specifically because Bitcoin DeFi wasn't something I was really deep dive into yet. So I'm super stoked. But start by maybe telling our listeners about yourself and about your company.
Yeah, my name is Jakob. I'm the founder, CEO of Hermetica. My background is as an entrepreneur, a software engineer. I worked across the board in crypto. I had a stint at Kraken and have been building Hermetica now for the last year and a half. And Hermetica, we are building the first Bitcoin-backed synthetic dollar. So essentially a dollar-denominated synthetic dollar that a Bitcoin-denominated synthetic dollar that uses futures contracts to hedge the dollar value and then represent that on chain as a coin, and that can be traded in the Bitcoin ecosystem. We're launching on Runes, which is a very new protocol on Bitcoin, as well as L2s like Stacks.
Okay, awesome. So there's a lot in there that I want to ask about Hermetica, but can I first ask, do you just refer to it as Hermetica or Hermetica Fi? I saw both online.
Hermetica.
Just Hermetica. Okay.
Yeah, awesome. Hermetica.
So I guess my first question is if we can unpack the stable coin, because I read a couple of articles from the release, which was like a few days ago or something, right? I read a few articles, and one of them mentioned that it's actually a stable coin that's, it called it a Bitcoin-backed synthetic dollar that also generates 25% yield. Can you unpack that? What does it mean?
100%. Yeah, so essentially you can think of it like this. If you talk to the user flow, there is approved participants that are able to mint and redeem the stablecoin, and they do that by depositing Bitcoin into our smart contracts. We then take that Bitcoin and essentially hedge it with a futures contract. So we sell the Bitcoin on the futures market, a perpetual futures contract. So we lock in the dollar value and then issue a coin that represents that dollar value back to the user. So if you deposit one Bitcoin, you would get, I haven't checked the price this morning, but somewhere around 60,000.
Yeah, 63,000, I think.
Like
at the time of recording, guys.
Yeah, it changes every day. So you would get 63,000 USDH back, and that is the dollar representation of those Bitcoin. That's why it's Bitcoin backed. If you think in accounting terms, if you look at the balance sheet of the protocol, it would be the asset side is Bitcoin and the liability side is the stablecoin USDH.
Right.
Now,
the yield.
Why does it have
a
yield?
That was pretty a good explanation, but then I was like, but the yield.
Yeah. No, and that's a great question. Also, to clarify, the yield is not set to 25%. It's not a fixed yield. This is a variable yield. It's up to 25%. Okay. We've seen this yield be 26% in the last bull market, but it fluctuates, and it fluctuates with the demand for long leverage in the system. That's how you can think of it. Essentially, the Bitcoin market wants to, generally speaking, or be long the underlying asset. And so people are willing to pay for that privilege to be long, and that is expressed in the futures markets as funding rates. So long futures pays a funding rate to short futures, and that fluctuates with the demand for that leverage, and it goes up to 25%, 26% to be specific in the last bull market, but can also go significantly less than that. And so since we are short the futures contract, we collect that yield from the people that want to be long, and we pass that on to people that stake the the stable coin and receive a, we call it a Bitcoin native bond. It's a separate token that essentially accrues the yield from the funding rates.
Okay. I find it so interesting because I recently spoke to someone from Pendle in one of our previous episodes, and we talked again about how they're basically like they're doing something different with yield. They're separating like the yield generation aspect of an asset and like the aspect of like the asset itself. And then here we have like another different way of, working with yields in the space in a different way. So I think so many different things going on with yield in decentralized finance right now. But I suppose from there, I would ask, so what's the motivation behind, I think you kind of explained it. So I guess the motivation behind building this stablecoin is because most people in Bitcoin are long. And then what was the second part of that?
Yeah, so
sorry.
The stablecoin, no, that's perfect. It's perfect. The stablecoin is not to go long Bitcoin, right? The stablecoin actually hedges the dollar value of your Bitcoin. So you're not getting any price appreciation, but you're also not getting any decline in price. And the motivation to build a stablecoin is that there obviously is a need for stablecoin. In my view, stablecoins are the killer app, one of the killer apps in crypto that have been growing like stablecoin volume is growing faster than Bitcoin volume. It's almost at the level or even surpassing at this point the volume of Visa. So it's a very significant part of the ecosystem that has significant use case, especially in the developing world. And I have like a background also working there and building businesses for this kind of user base. And the issue or the challenge we have in the Bitcoin ecosystem as Bitcoiners is that if you want to access a stablecoin, you have to either go to Ethereum or Solana, or you have to go to a centralized exchange and go to your bank account. So you don't really have access to a stablecoin on Bitcoin right now, and that's obviously changing now. Or you have to go to Ethereum and hold your stablecoin USDT or USDC in your MetaMask wallet. and so that is the one aspect. I think that what I'm seeing being a builder in the Bitcoin ecosystem is that there's a thriving Bitcoin DeFi economy that is very much emerging, right? It's not at the levels where it will be in the coming years, but it's growing very, very rapidly. And we need a stable coin to represent the dollar as an asset on chain. The dollar is still extremely important, I would argue, the most important asset in the world at this point in time. And we need to have a representation of that on chain so we can conduct commerce and finance through the Bitcoin ecosystem. That's the one aspect. The other aspect that there is, the dollar or stablecoins have really been a great product for the developing world. I think they see it as the dollar bank account essentially, but there has been a massive success. USDT on Tron there's more USDT on Tron than there's on Ethereum. It kind of like shows you as a little data point where the demand is, but they don't have access to a yield instrument. They don't have access to a savings instrument. They don't have access to bonds, essentially. And giving them access to a yield product that is crypto native, that can significantly offset the inflation of the dollar that we're seeing, and I think we'll see continue to increase in the coming years, I think is a very important product for them to have in their portfolio.
Awesome. I have two more questions about the stablecoin. So the first one is, I'm assuming this was probably the first of its kind type of stablecoin, but I might be wrong. And is it the first product of its kind? And were there any other attempts of building a Bitcoin-based stablecoin? And my other question is actually, since the launch, which is it's so recent, it's so new, what kind of demand have you seen? What's happened after the launch?
Yeah, good question. So are there other Bitcoin-based stablecoins? There's a number of them emerging right now. There's some that have been in the market. A lot of them have been over-collateralized stablecoins. So a collateralized debt position, essentially, where you deposit Bitcoin and then there's a stablecoin issue against that position, which essentially represents leverage. There is a number of other very interesting approaches being built right now. I think we're really in a time where it's the time where an idea has come, or the time for an idea has come to flourish. And I think we'll see a number of different projects go to market, and it will be really interesting to see those experimentations. What has been the the reaction of demand. I think overall the community is extremely excited about the prospects of having a Bitcoin-backed stablecoin. We've gotten a lot of interest. It's still very early days. The infrastructure also is still pretty slow and clunky, right? So like Bitcoin DeFi is still slow, and the user
We're
experience
getting there, guys. We promise.
is not the best. Yeah, no, it's going to change, I think, rapidly. There's a number of L2s and other scaling technologies coming online. Happy to talk about that more as well.
Sure.
It's been a very great reception, let's say it like that.
That's awesome. I mean, I'm glad for that because, to be honest, I hadn't. Like, I heard about it, but I think I was quite like early to see the news because I already knew I would be having you on as a guest. So I was kind of already like, I wasn't sure how widespread the news was. So I'm glad that like it's been well received. And I totally agree with the fact that it seems like when it's time for a certain product, when the time is ripe, the people just come. Like a good product with like that solves a real world problem is always going to have good reception. So that sounds really cool. But I wanted to go back into the Bitcoin DeFi topic, which you mentioned, because I was trying to kind of research a little bit what Bitcoin DeFi looks like versus DeFi on Ethereum, for example. And something I found, I looked at total value locked on DeFi Llama. I mean, I guess that's like a reputable enough source for that kind of thing. And TLV on Ethereum for DeFi was noted there as about 55 billion. And on Bitcoin, it was only 1.2. Just for reference for our listeners. So after Ethereum, big chains were Tron, Solana, like Solana has 4 billion. That kind of thing. And Bitcoin, in terms of TLV, was somewhere in the ranks of Avalanche in terms of like the amount and the percentage of that market that it holds. At the same time, I was thinking about it and I tried to look at how many DeFi projects, like how many projects are actually building in that ecosystem. And I know that layer 2s for Bitcoin weren't as prolific as they were for Ethereum. Like Ethereum kind of led with that, whereas Bitcoin is only just starting to like get in there. And I don't know how precise this data is because there were different sources that the information wasn't very clear, but I kind of inferred that there's like 100 and something, more than 100, almost 200 DeFi projects on Ethereum alone. Various other chains like Polygon, 81, 78 for Arbitrum. These numbers are kind of roughly because, like I said, I couldn't find a definitive source, but there were less than 20 that like were on Bitcoin. I guess there's more now. I feel like this was a bit old, but I feel like Bitcoin holding that like percentage-wise, let me just look, it's 1.3% of that TLV in DeFi overall. So I think Bitcoin holding that 1.3% with ecosystems like Avalanche, which is like almost the same percent, on top of like having so little DeFi apps tells us something, you know, that like adoption for the Bitcoin DeFi is coming faster despite there being less projects. And the way I thought of it, it works as well for like your stable coins. It's that like a Bitcoin-based stable coin and Bitcoin DeFi is a high-speed train that's running on well-oiled tracks because that's Bitcoin. Bitcoin is a really well-oiled track and people know it. So how would you say the Bitcoin DeFi space is like developing? What's going on there that's not happening in Ethereum? How is it going to grow? Do you agree that with my theory that like adoption is going to be so fast for the Bitcoin DeFi ecosystem as opposed to all these other chains?
Yeah, no, it's a great question. Very fascinating topic to think about. I think that Bitcoin development kind of went through, I call it the dark ages. I heard other people talk about that. And that because it's really a cultural, it's a mindset shift that is occurring right now, that coming out of the dark ages where essentially there was this notion that building on Bitcoin is bad and it should not be done because it hampered or it intervenes with its most important function, which is just being stable and a reserve asset, which there's certainly a place and time for that. And I'm very much in that camp to say that it needs to be a very strong security and a very strong reserve asset. But with the introduction of ordinals around a year ago, and it was March 2023, that I call it the veil of ignorance was lifted. And I think we entered the golden age of building on Bitcoin. And there is a new builder spirit that is coming into the system. And I think I very much agree in that this spirit there's kind of pent up demand. There's all these people, and I would include myself in that are really deeply appreciate Bitcoin for the values that it has, but at the same time are builders and want to create innovative products and build a financial system on top of this extremely strong foundational layer. And so what we're seeing is a lot of experimentation, a lot of really smart people coming in to build scaling solutions and DeFi products. And I think we will see an explosion in TVL and usage. The other element that I think is important to mention is that Bitcoin is the biggest asset. That's the biggest pool of capital in crypto. It's, I don't know, again, it's changing every day, but it's around $1.3 trillion.
People already have Bitcoin,
yes,
so they can interact with this ecosystem already because they're already in it. So it's just a matter of using these apps now.
100%. They have it, and there's a good cohort of people that want to do something with their Bitcoin, that want to experiment. How is it different from the other ecosystems? I think that in general, the Bitcoin ecosystem is more conservative, is a little bit slower moving and more focused on security. But to be honest, if you look at the ordinal space, it's very much degen and very much interested in experimentation and having interesting sources of yield or interesting things to do with their assets. And the volumes for ordinals have at times surpassed Ethereum NFT and Solana NFT volumes combined.
I think I briefly remember this because I did an episode that was a lot about Bitcoin ordinals, and I think it was it was in November that I did this episode, and it was really cool. Andrea Chang was my guest on that, and she kind of called it on ordinals because this must have been like when ordinals were maybe like about half a year old, something like that, in terms of like the Bitcoin DeFi ecosystem was like not even a year old. And she was just kind of like, yeah, this is really going to explode. And it really did. Like a month later, I think that's when like people were seeing a boom in ordinals. And she described it like very professionally because she works for a venture fund. But then like, I think she was also quite conscious of like the degen notion of ordinals. And I think there was like recently now with like the beginnings of the bull market, we also saw ordinals really shoot up again, if I'm not mistaken. I haven't followed them very thoroughly since November.
Yeah, there was a very interesting price action over the last, call it 4 or 5 months. And there's a lot of interest, there's a lot of volume. And that is, ordinals kind of laid the foundation for this renaissance in building. It also introduced a new primitive that allows builders to actually use the Bitcoin blockchain in new and creative ways. So I think we're very much at the beginning of understanding how we can actually leverage the ordinal protocol to build other more meta protocols on top of Bitcoin, which is that's what's happening right now. Obviously, Runes was introduced a couple of weeks ago. There's a number of other projects, for example, the Arch Network, that are using ordinals and other technologies from the crypto space, such as zero knowledge proofs and in the Solana EVM, to build smart contracts on Bitcoin with another meta protocol. So that's just to say there is now a primitive that allows Bitcoin builders to leverage the Bitcoin protocol in a new and innovative way. And, the sky's the limit.
This might be a really ignorant question, but you said leverage basically Bitcoin using another meta protocol. Like, would that be a protocol outside of like the Bitcoin blockchain and it's like surrounding L2s? Because you mentioned like Solana and stuff. How does that work?
Yeah, no, that's a great question. And I can do my best to describe it.
Sure.
I'm not an expert in it, but essentially
Sorry.
how ordinals work. No worries. I'm learning with you. How ordinals work is essentially, you can think of it like this. There's the Bitcoin blockchain, which is all the nodes running Bitcoin Core. And then there is a way to inscribe data into the blockchain. So it is data that is actually written into all the nodes and stored in the nodes. Some of it is being discarded. Some of it stays there forever. And then there can be what people call an indexer, which essentially reads that data sequentially and makes sense of it. So that is a node outside of Bitcoin Core that interprets the data that is written into the Bitcoin blockchain. That's what's called a meta protocol. People would probably tell me that was not the right definition, but that's how I see it. And so the data lives on Bitcoin. Bitcoin is basically a data layer in that sense, but the interpretation is not done. The interpretation of the data is not done by Bitcoin Core itself, but by another indexer or node.
I think that's fascinating in terms of like interoperability and how important that's becoming. I think it could really turn into kind of like a bunch of chains that could be really, really bridged together. And I don't know. My theory is that we're probably going to end up using like one different blockchains with like different specializations that interconnect with each other over time. But, maybe that's just my utopian, overly simplistic view. Another question I had about a lot of the Bitcoin DeFi ecosystem, do you find that as compared to like DeFi on Ethereum, for example, how is it developing? Are people jumping onto Bitcoin and creating the same L2s and decentralized apps as we currently have on DeFi, as in like filling those functions just on a different blockchain, or are they actually doing completely different things?
Yeah, so I mean, at the end of the day, the financial system is pretty much always the same, right? Like people want to do a couple of different, or not a couple, but a handful, 10 different things with their assets. They want to trade them, and they want to borrow and lend against them, and they want to earn yield with them. And if you look at DeFi in general, you can probably bucket 80%, 90% into those categories. There's obviously some other ones that I'm like glossing over. And so there's not like Ethereum DeFi in itself didn't reinvent finance in that it reinvented the way that we use our assets. It just found a new, more decentralized, more permissionless way to do so. And so we're seeing very, very much the same primitives being built on, I think, on every blockchain, including Bitcoin, which is there's trading, there's lending and borrowing, there's way to earn yield, there's stablecoins, there's other ways to represent assets, there's NFTs. And so we're not seeing anything fundamentally different. I think there is nuances, specifics of Bitcoin that are slightly different, with different ways to trade them, because there's actually limitations in the blockchain, right? There's no smart contracts on Bitcoin, and the block times are very slow. So the UI UX has to be different. But in general, I think the Bitcoin ecosystem, and really every ecosystem, learns from each other, right? And so like, I'm a big fan of Ethereum. I'm a big fan of Solana. I use it all the time. I use it every day, and I get inspired, and I learn from the people that build there. And art, in my opinion, is the recombination of things that exist already, and it always has been throughout history. So we don't have to reinvent everything. We just have to recombine things into new ways and bring them into new ecosystems and offer them to new user bases. And I think that's what's happening in Bitcoin DeFi.
Awesome. Yeah, I was going to ask you if there was a specific like application that you'd seen that was particularly innovative or just something really impressive that you wanted to see. But if it's just getting mimicked, I guess, I don't know. If you still have one, you can share. But
yeah, so I think the most impressive Bitcoin DeFi application right now is Liquidium, which is a peer-to-peer ordinal lending platform, which uses DLCs and PSBT, so partially signed Bitcoin transactions and discrete lock contracts, to allow people to trade or lend against their ordinals, not trade. So you can lock your NFT, your ordinal, into a DLC, and then somebody can lend you Bitcoin against that collateral. And that has been quite the good application, very successful, almost 100 million in volume, and really pushing the limits of the boundaries of what's possible on Bitcoin today. That's with Bitcoin script, right? And we're, as I said, we're seeing very interesting meta protocols that are going to bring maybe Solana EVM like transaction speeds and user experience to Bitcoin as a meta protocol. And so we're like at the cusp of those more sophisticated smart contract based applications coming.
Cool. Okay, I want to backtrack a little bit, because while we were talking about all this, I was thinking about the L2s that you mentioned at the very beginning. I think you mentioned that your stablecoin USDH is like just launched on Runes, and then you also mentioned Stacks. So those are Bitcoin L2s, right? I got that right? I've heard of Stacks before, but can you kind of lead us through what is particularly useful and what those layer 2s allow users and builders to do in the Bitcoin ecosystem, just so our listeners have a good idea of like what you're actually building Hermetica on and how it works and why it's good and snazzy for the future of Bitcoin?
Yeah, 100%, and it's a very important topic. I think there's really, I see it like there's a number of different primitives or elements that need to be present for Bitcoin DeFi to be built. And some of them are present on Bitcoin L1, and some of them will need some sort of meta protocol or L2, whatever you want to call it and how you define it. What we need a way to represent money. We need a way to represent fungible and non-fungible assets. That's happening on Bitcoin L1. with obviously money is Bitcoin, and L2 is, the non-fungible assets and fungible assets are ordinals and runes at this point. What we also need, though, is a trustless way to execute computer programs, which is called smart contracts. And that is not possible in Bitcoin L1 at this point, because Bitcoin script is extremely limited. It's just also not the philosophy of Bitcoin. It doesn't want to be able to do that.
Yeah, I feel like Bitcoin in that sense is like a bit of a one-trick pony. It's just like, I do this one thing very, very well. So everything else we have to build on. Sorry, can carry on.
Exactly. Yeah, exactly. 100%. And so we need a way to execute those permissionless programs, and we need a way to bring assets into those programs, right? We need a way to bring fungible and non-fungible assets and money into the smart contract environment. What we also need, in my opinion, is very strong assurance of finality. We need to know that our transactions can't be censored or reversed, right? And so what Bitcoin L2s are doing are essentially bringing this execution environment for smart contracts to Bitcoin, while inheriting to some degree, and it's not going to be 100%, to some degree, the finality of Bitcoin. And the other element that they're introducing, and I think is very important, is a better user experience by providing faster and cheaper transactions.
Right.
Because Bitcoin is, as a Bitcoin, I say this very transparently, Bitcoin is not a great user experience.
Oh, yeah.
It takes forever. You also don't know when actually the blocks happen, right? So you can wait a minute or you can wait 2 hours for a block. And so Stacks has been the first, or one of the first L2s that has been building this kind of technology stack. They started in 2017, went live in 2021. So way before the hype of around Bitcoin L2s was happening, Stacks has been building and chipping away of building this kind of infrastructure and this kind of community. So the community that is building on Stacks are really those hardcore Bitcoin builders that want to see Bitcoin DeFi and Bitcoin applications built, and have built that and have worked towards that goal before it was cool, let's say, right? Like
nice, yeah.
Before anybody else was doing it.
Oh, yeah. I remember what the ecosystem looked like before 2020. It was so, I don't want to say dead, it was just so quiet. Everyone was just like chipping away, building their thing. It was so chill. No one, I feel like...
it was very chill. There was a strong vision. Mm-hmm. Right? Like the people are all mission driven. They want to see Bitcoin succeed. But there was not a lot of
I feel like
hype
the people were really mission driven. So like while I was around those people, I was like, I can totally see this happen. And then I would go out in the real world and be like, nobody knows what this is. Nobody knows it exists. Nobody's interested. And now everybody, they don't know how blockchain works, or like a lot of times how cryptocurrency works and how to deal with it. But they know what it is. Like they've heard of it. So I think it's changed so much, but it like astounds me how much time, like it's 2024 from like since I was kind of in the system, 2019 to 2024, how we still don't have the mass of people knowing how blockchain actually works, or at least how they know what it is in terms of like they've heard of it, but they don't really know how it works, like on a basic level, and like why it's better. It's astounding how long it takes.
I mean, how many people know how the fiat system works?
Yeah, I think that's a problem in itself. I talk a lot about how I'm very conflicted about whether we should kind of force people to struggle a little bit and know why we should be using blockchain. Like we should teach them why they should be using it. I'm very pro a good UX UI. I think we do that very well at Nexo, but at the same time, I'm just like, if you let people go with like using blockchain without understanding why, you're just exposing us to the same issues we have with the fiat system. They don't know why it's a problem. So, they just use it because it works. We should be a little bit more mindful.
I think that's a very good goal, and I think a very idealistic goal. And I would agree. I think the reality is that people will not understand. And I mean, how many people will understand how a car works or a plane works or any other really technology? People don't need to or want to understand technology. They want technology to solve a problem for them. And that solution has to be, they say 10 times better, and I would agree, as the current solution that they're using, because people are very slow to change. And so I think that is our imperative as builders, that we have to build products and technologies that are 10 times better in user experience and value to the user in order for them to adopt it. And we're not there yet in crypto.
Yeah, I guess I'm quite like an idealistic person because I really wish that people would understand why something in the system they're using is a huge problem to them. And it's not to their benefit. It's horrible for them. It's really harming their way of life, but they're, still unwilling to switch to something else. So yeah, I guess it is up to us to make the UX so good, to make like it so much faster, so much cheaper for people that they're just like, oh yeah, why would I use my bank account anyway? But I digress yeah, keep going.
If you're able to earn a very significant yield on your dollars within the crypto ecosystem, but your bank pays you 3%, maybe that's a good motivation, right? Like to switch over. Like we have to build products that are so attractive that people are like, well, of course I'm going to use that. And I'm willing maybe to take a hit in the UI UX in the interim, but I'm so excited about this product.
Yeah, but I do find that people are still distrustful because I know quite a lot of companies, like even with the way we structure our app and our whole interface, I think it's a lot easier for me to navigate than any bank app that I've ever had. And I can say that for a lot of like neobanks as well, like Venmo, Revolut, very easy interface, really nice apps, better than any bank I've ever had. The issue comes in that people are just distrustful because they're not established institutions like, say, HSBC or, whatever, bank they have, say, in the States. They're just still distrustful. I think that's going to take time, building trust, building understanding, and then building the UX. But yeah, this is a philosophical discussion I've had with probably every guest in the last few episodes because I'm very conflicted about letting people go the easy way, because the next time we have a system that's not working and is not to the benefit of the user, it's going to be because, again, they don't bother to understand why we've transitioned to something that works and why it's so important. But anyway, how about back to Hermetica and like you're building, what were some challenges for you building on runes and stacks, in general, building in Bitcoin DeFi with your stablecoin and with your overall product?
Yeah, I think that the challenge is manifold. I think that the developer experience building on Bitcoin especially is not good. There's not a lot of resources. There's not a lot of documentation. There's not a lot of help. I think that's significantly better in Stacks, where there's a whole ecosystem of support that helps builders with developer tooling, which is also still nascent. We're kind of beta testing it at some degree and like providing feedback as we go. But there is very much a spirit or a support system that wants to help builders succeed. So that's very helpful. The other element, and this, we've touched on this a number of times already, is as a developer, you kind of are dependent on the blockchain working. And if you deploying contracts, deploying transactions, and you have to wait for hours to get extra confirmation, it just slows you down tremendously. And it's quite frustrating at times. So those are the main challenges. And on the product side is actually having the user base, which now is there, but 2 years ago wasn't, to test and then also use your product, right? You need to know who your user is in order to build a product that they want to use. Right. And that's what we're getting at.
So I picked up on 3 things there. First one was the support system and the information. The second one was the speed at which you're able to actually deploy the solutions that you're creating. And the last one is the user base. Yeah? Cool.
That's right. Yeah.
Those 3 things. That's
great summary.
Yeah. And as opposed to Ethereum, I'm particularly interested in what you said about the support that you got from the community at Stacks and everything. How does that compare, say, to building in the Ethereum space? Is the support there, and has it been there for quite a lot longer than it has for builders on Bitcoin? Do I have that impression right?
Yeah. Mm-hmm. No, 100%. I mean, the Ethereum ecosystem is the most mature, the most developed developer tooling, the most developers, right? There's a lot of brain power and ecosystem companies that have built amazing tools for developers in the Ethereum ecosystem. And that is obviously needs to be rebuilt to some degree in the Bitcoin ecosystem. There's now L2s that obviously say, okay, we're building on Bitcoin, but we're using the EVM, we're using the Ethereum virtual machine. So that allows them to port a lot of the developer tooling, the wallets, etc., over as is out of the box. And I think that's not necessarily a bad idea. But Stacks went another route. There's a completely different smart contracting language. It's a different technology stack. So Stacks had to rebuild a lot of the developer tooling, and that just takes time and refinement, with everything software related.
Yeah. Well, it looks like it's gone well, in terms of you guys being able to actually use it now. I read when I was researching Stacks a little bit, I read about the Nakamoto upgrade. So how is that? What is it? What's it going to change in terms of developing projects? And yeah, how does it change the game?
Yeah, it's actually a very, very significant upgrade in Stacks. I would say it's almost becoming a new chain. And it's integrating, from my perspective, what it's integrating, it's basically using Bitcoin finality, but building on top of that a proof of stake system similar to Solana. And they'll have a signer network that will allow it to create very fast and cheap transactions. So on a brass tacks level, what will Nakamoto bring? It will bring a much higher finality assurance for transactions. So you actually inherit a lot of the Bitcoin finality, and Bitcoin finality means that if you want to reverse Stacks transactions, you have to reverse Bitcoin. So you have to reorg Bitcoin, which obviously is the most difficult or most costly thing if you want to achieve that as an attacker in crypto. And then it will bring a signer network, which allows the network then to have very cheap and very fast transactions, talking about 5 to 10 second block times. And therefore, there's a lot more block space, which allows for more transactions that are cheaper. That is, yeah, it's nice. Extremely excited about it. The other element that is coming as an upgrade is, they call it SBTC, which is essentially a non-custodial or trustless way, or trust minimized way, to be more accurate, to bring Bitcoin into the Stacks ecosystem by allowing the signers or the stakers, the Stack stakers, to become one signer in a multi-sig that brings Bitcoin from L1 into Stacks, and then allows that Stacks to be represented in smart contracts, which obviously is a huge unlock in itself. If you think about like a Polygon-like experience where you have extremely fast blocks, cheap transaction fees, and you have a way to bring Bitcoin and the vast capital that is blocked into Bitcoin into that ecosystem, and then execute smart contracts with it, I think that's going to make some great a great user experience. No, there's obviously many different flavors of bridged or bridged Bitcoin and wrapped Bitcoin. There's a wrapped BTC on Ethereum, which is the biggest one, which
WBTC,
is a custodial
right?
solution. Exactly, and SBTC is essentially a version of that, but more decentralized for Stacks.
Nice. So I want to go back to Hermetica, because we talked about your stablecoin a lot, but I wanted to ask if what else, the company does and what it offers besides the stablecoin. What's the rest of the product offering?
Yeah. So our other product line is non-custodial yield tokens. So essentially a way for Stacks assets and Bitcoin to earn yield. And we're using specific derivative strategies, especially option strategies, to achieve that. So you can think of it as a smart contract that you can deploy your assets into, and then a specific amount that is hard-coded into the contract, call it 1 to 2%, depending on the strategy, is used to execute a advanced option strategy that is designed by our partner that is a leading asset manager in the space, to generate a yield over time. And that is now live for a Stacks asset, and will become live for Bitcoin. So the other element to that is that it's represented as a token. So you have a bearer token that represents the assets in the smart contract that then you can trade, you can use in DeFi, or you can use to withdraw your funds if you so wish. And that token, similar to a liquid staking token, accrues the value of the strategy.
What's the token?
Well, it depends on the strategy. So for the current one we have, it's called STXT Earn. So it's staked Stacks Earn. You put staked Stacks in, it earns yield from the staking, and it earns yield from the trading strategy, and that's represented as a token.
Okay, I think I'm starting to figure out why I'd remembered STVTC. I think I was probably reading about that. Yeah. There we go. I found it.
Yeah, that can be. Yep, that's staked Stacks, STSDX.
Staked Stacks. Oh God, tongue twister. So yeah, besides blockchain tongue twisters, how does what you just described from Hermetica relate to maybe more known yield pools, more popular in Ethereum DeFi? Like, how is it different?
You
the
mean
same?
AMM pools?
Yeah.
Yeah. So
I know that's a bit of a
they're
two different things, but I think they might be connected in
significantly
certain.
different.
Yeah.
It's significantly different. So AMM pools are a way to create liquidity for trading in decentralized exchanges, and usually involve depositing 2 or more assets into a smart contract to make the market automatically on a curve, predefined curve. And those depositors usually earn a yield from the trading fees, but they also get arbitraged and have what is called impermanent loss, which oftentimes is very permanent. And it's a way to express a strategy or a yield. It is similar in that way, but it is represented as a token usually as well, because you get an LP token. Our strategies are derivatives based, so it's actually a trading strategy that is behind it, and we use very specific risk management systems to make it so that it's very clear how much risk there is in the system, and there's no tail risk. AMM pools have very significant tail risk. If one asset goes to the moon, you can lose basically everything.
And it happens so fast as well, doesn't it? It can just be like that.
Yeah. Everything in crypto happens pretty fast, right? So I think they have AMM pools obviously have their place in the ecosystem and are very useful, but I think the issue is that a lot of users don't fully understand how they work and the risk that they involve. And I think that and that's totally understandable. It's quite complex. Yeah. It's not super easy to understand. And so, yeah, there's a lot of people that ape in, and I think that's a useful part of the ecosystem to experiment and test out. But I would be cautious to have significant amounts of money in an AMM pool to earn yield if it's not a stable swap. Stable swaps are obviously different because there's very different. There's not as much impermanent loss.
Yeah. So basically, Hermetica's situation is more of like an underlying trading strategy rather than an AMM pool. Two different things, right? Got it?
Yeah.
Okay. You're quite good at explaining this stuff. So I don't really have any more questions, but I always open the floor to my guests at the end of each episode to tell us if they have any final thoughts, anything they want to share with our listeners, anything we didn't talk about, but they think we really, really should. So anything you want to share with our listeners before we go off?
No, I don't have any deep parting thoughts. I really appreciate this conversation. It was great questions. I would just say, come play with us in Bitcoin DeFi if you're interested. There's a lot of opportunity to experiment, be part of early protocols, including our own, and experience, DeFi on Bitcoin. Come check out hermetica.fi, sign up to our newsletter there, and stay on top of what we're building. Come check us out on Twitter, obviously, Hermetica at hermetica.fi, and get involved in our ecosystem and play around and poke around, and obviously be critical also about what's being built and what is actually creating value for people. But there's a lot of exciting stuff.
Alrighty, thank you so much. So, alrighty, guys, that was our episode on Bitcoin DeFi and Hermetica with Jakob. Thanks, Jakob, for coming on, and we'll catch you guys next time.